If you looked at your portfolio on Monday morning, you probably felt that familiar knot in your stomach. Over the weekend, we saw massive geopolitical escalations, Navy escorts in the Strait of Hormuz, and crude oil surging 10% straight toward the $80 mark. And right on cue, the retail panic set in. Amateur traders started dumping their tech shares, rotating to cash, or trying to short the market based on the headlines. But if you have been following our data, you know that trading the news is the fastest way to blow up your account. While retail traders were paralyzed by the fear of a broader conflict, the smart money didn't panic. They simply rotated. They moved capital out of overextended tech and straight into the ultimate safe harbor, Phase 3 energy and value. Take a look at Marathon Petroleum, ticker MPC. While the broader market was bleeding on Monday, MPC was quietly surging to new 52-week highs above $220 a share. Our Prospero net option sentiment caught this footprint perfectly. Well before the geopolitical news broke, institutions were loading up on MPC. Why? Because when energy premiums rise, refiners see their crack spreads widen, driving massive profitability. We didn't need to guess if a broader conflict was starting. The options data told us exactly where the big money was hiding, and it paid off with a massive double-digit gain since their last earnings report. But the rotation didn't stop there. Once the Navy stepped in and the initial shock of the oil spike cooled off, that institutional capital didn't just sit in cash, it aggressively rotated right back into risk-on assets. This is where headline traders always get left behind. They are still reading yesterday's news while the data is already pricing in tomorrow's bounce. Look at AST SpaceMobile, ticker ASTS. They just announced massive Q4 revenue growth and a new $30 million government contract. But more importantly, look at the underlying data. Right after their earnings, we caught a massive jump in their net options sentiment. The smart money was quietly loading up on calls, pushing its momentum score through the roof. While retail was still too scared to buy the dip, ASTS surged. The institutional footprint was undeniable. So, what does this mean for next week? The truth is, the market is walking a tightrope right now. With oil flirting with $80 a barrel, the Federal Reserve is trapped. Higher energy costs mean inflation could easily rebound. And if inflation rebounds, those rate cuts everyone is praying for are completely off the table. We are entering a highly volatile period where capital is going to rotate violently between sectors. You cannot survive this kind of market by guessing the headlines. You have to follow the money. If you want to stop getting trapped and start trading alongside the institutions, you need the right tools. Hit the Prospero link in the description below to get access to the exact net options, sentiment, and momentum data we used to catch MPC and ASTS this week. Stop trading the noise and start trading the data. I'll see you in the next one.